Homeowners with good credit scores will soon be facing higher mortgage fees as the Biden administration seeks to close the homeownership gap and get more first-time and low-income buyers through the door. A new federal rule will raise the monthly mortgage payments of buyers with good credit scores by over $60 a month, while riskier borrowers will get more favorable terms because their fees will be reduced. Starting in May, the current structure of the Loan Level Price Adjustment LLPA matrix will be upended by the Federal Financing Agency in hope of addressing housing affordability challenges in the U.S. So what does this mean for you in your pursuit of your Santa Cruz real estate goals? Hi, I'm Shamika Fox, your Santa Cruz real estate expert and your personalized real estate concierge. Don't forget to like and subscribe to my channel to stay current on real estate news and the housing market. Now, you're probably wondering, well, what is the Loan Level Price Adjustment Matrix, LLPA? A Loan Level Pricing Adjustment, LLPA, is a risk-based fee assessed to mortgage borrowers using a conventional mortgage. Loan level pricing adjustments vary by borrower based on credit score, down payment, whether or not you are a first-time home buyer, income, loan limits, occupancy, property type, and debt ratios. Borrowers often pay LLPAs in the form of higher mortgage rates. For many years, the lower your credit score, the higher your fees. This is what makes Federal Housing Administration FHA financing attractive. With FHA loans, the mortgage insurance has a fixed rate. For example, whether you have a 620 credit score or an 800 credit score, you pay the same rate for mortgage insurance. So why is this change happening? That's a great question. The rule changes are part of the Federal Housing Finance Agency's FHFA efforts to provide equitable and sustainable access to homeownership and to strengthen capital at Freddie Mac and Fannie Mae. The Biden administration's stated purpose behind making these changes is to help make it easier for borrowers who have historically been disadvantaged and have a hard time accessing credit, said Realtor.com chief economist Danielle Hale. As the chart shows, the higher the score, the lower the hit to the rate. Those with higher scores still have lower fees, but their costs are rising. This should have less of an impact as mortgage rates improve. The matrix shows that buyers are still incentivized to put more down. Homeowners who put down a larger down payment of 15 to 20% could see a bigger increase in mortgage fees, but Bankrate.com mortgage analyst Jeff Ostrowski said that shouldn't change a borrower's thought process. The new matrix is trying to decipher is only part of the equation, Ostrowski told ABC News. The other part is mortgage insurance. Borrowers who put less than 20% down have to pay mortgage insurance that more than offsets the lower upfront fee. So there's no financial advantage to the borrower to put down less than 20%. Take a look at this chart to see LLPA waivers for first-time homebuyers with qualifying income less than or equal to 100% of the area median income AMI or 120% AMI in high-cost areas. Loan level price adjustments will be waived. So you may be wondering, how will this work? The new fees are slightly more expensive for some borrowers with good credit and slightly less expensive for some borrowers with less than perfect credit. If you have a stellar credit score, you'll still pay less than if you have a weak one, but the penalty for having a lower credit score will now be smaller than it was. Because of these changes, the advantage of having a higher credit score or making a larger down payment is not as big as it used to be, Realtor.com chief economist Danielle Hale said. Let's look at an example. Beginning May 1st, 2023, a buyer with a good credit score of 750 who puts down 25% on a $400,000 home would now pay 0.375 in fees on a 30-year loan, or $1,125 compared to 0.25 or $750 under the previous fee rules. Meanwhile, a buyer with a credit score of 650 putting a 25% down payment on a $400,000 home would now pay 1.5% on fees on a 30-year loan, or $4,500. That compares with 2.75 or $8,250 under the previous rules. According to the FHFA, the new rules are reinstatable funds, reduce the interest rate paid less qualified buyers. Even with the changes, mortgage fees continue to favor borrowers with good credit and you still get a much better deal with a strong credit score. The fee reductions don't apply to borrowers with credit scores of less than 680, so tanking your credit score in hopes of scoring a better deal would backfire, Ostrowski said. It would not be advantageous for you, so don't do that. If you would like to dive deeper into the new mortgage fee rules and the new loan level price adjustment matrix, I would be happy to connect you with one of our preferred Santa Cruz lenders. However, the new mortgage fee rules do nothing to address ongoing inventory challenges in the housing market, which is putting upward pressure on home prices right here in Santa Cruz. Let's get into it. I'm sure you've all been hearing that the Santa Cruz housing market is supposedly cooling down. So why then are there still bidding wars for Santa Cruz homes, and why are homes selling for more than the asking price? It's true that the housing market in Santa Cruz has cooled down from the madness during the COVID-19 pandemic. However, Santa Cruz homes in desirable locations are still receiving multiple offers and often selling for over list price. Opposite things can be true simultaneously. The increase in mortgage interest rates to 6 to 7% from pandemic levels of 2 to 3% has restricted the budget of many Santa Cruz potential home buyers. But the higher mortgage rates also made many potential Santa Cruz home sellers think twice about putting their home up for sale, many of whom would be local buyers as well. This phenomenon has resulted in many more Santa Cruz home buyers than there are Santa Cruz homes for sale. With the little home inventory currently, we have been seeing buyers pouncing on move-in ready homes with curb appeal and an appropriate list price as soon as it is listed for sale. I personally, have seen multiple Santa Cruz homes receive 4 to 8 offers last month, and I got one of my buyers into contract on a property that had not yet been listed. What Santa Cruz homes aren't selling nearly as well? That's a really good question. Santa Cruz homes that are overpriced and or need a lot of work, home buyers tend to shy away from. Home buyers either cannot afford or are not able to pay extra to remodel these properties. They are dealing with significantly more expensive monthly mortgage payments, which are about 79% larger than those of homeowners who bought 2 years ago. First-time home buyers looking to purchase a home in Santa Cruz and home sellers alike need to have a strategy in place if they want to be competitive. Reach out to me today so we can create a personalized strategy for you and your family to succeed in this crazy market. After all, I am your personalized real estate concierge, and I'm here to save you time and money while helping you achieve your Santa Cruz real estate goals. Check out my channel for important tips on the Santa Cruz home selling process, and while you're there, don't forget to like and subscribe. Now let's take a look at the Santa Cruz County numbers for April 2023. For single-family homes in Santa Cruz County, the sales price to list price ratio decreased slightly from 101.5% in March to 100.3% in April, which is down from 109.9% a year ago. Average days on market for single-family homes for the month of April was 38, down from 47 days on market in March, which is up considerably from 15 days on the market a year ago in April of 2022. The number of active listings for the month of April for the single-family homes came in at 229 homes, and the number of single-family homes that sold in Santa Cruz County was 76, with the median sales price increasing from $1,177,500 in March to $1,349,500 in April 2023, which is down from $1,405,000 last year, 2022. For condos and townhomes in Santa Cruz, we saw the sales price to list price ratio increase from 100.4% in March to 103.3% in April, which is down from 110.2% a year ago in April of 2022. The average days on market for condos and townhomes for the month of April came in at 18 days on the market, down considerably from 41 days in March. The average days on market has increased slightly from 14 in April 2022. The median sales price for condos and townhomes increased significantly from $865,500 in March to $950 in April. This price is up from $928,500 in April of 2022. The number of active listings was 36 this month, and the number of sales for condos, townhomes decreased from 21 closed homes in March to 17 closed in April 2023, which is down from 42 that closed in April of 2022. Thanks for tuning in to this market update for Santa Cruz County. Like and subscribe to stay current on the Santa Cruz housing market. If you would like additional information or a market evaluation for a specific property, or if you'd like to get started searching for your dream home here in beautiful Santa Cruz, call me for a complimentary, confidential consultation. I'm Shamika Fox, your Santa Cruz real estate expert and your personalized real estate concierge. And as always, I'm here to help. Please follow me on my socials and don't forget to like and subscribe. Have a great day.